U.S. stocks lost ground on Friday, with the tech sector snapping a three-day winning streak with a thump. The Nasdaq fell 1.9% on Friday after earnings results from Snap doomed the tech sector and sent shockwaves through the digital ad market. The S&P 500 dropped 0.9%, and the Dow lost 0.4% during the week's final trading session, however. And surprisingly, all three major indices finished the week with modest gains. Elsewhere on earnings, shares of Verizon lost more than 6% on Friday after the company reported quarterly earnings that were not well received. You think? And I was looking at Verizon. In other news, Walmart led all companies worldwide and scored the top spot as the highest grossing company in the world with $573 billion in net revenue in 2021. Close behind was Amazon at $470 billion. And if you thought the stock market was crazy, Seton Hall Law Assistant Dean Brian Sheppard has called for Congress to buy out Supreme Court justices by offering them large sums of money. If needed, he suggests that President Joe Biden could scrape up enough dough to prompt justices to cash in and get out. Of course, this was directed toward the Republican-appointed justices, as this would be easier than packing the court. In other news, the White House Pandemic Response Coordinator delivered a grim message on Friday about the ever-evolving coronavirus pathogen. He stated that this virus is going to be with us forever. So, we've got that going for us. And lastly, as I've told you, I have a stack of cash ready for investing. So, I'm ready for my first investment. And being that no one has claimed the $555 million mega jackpot on Tuesday night's drawing, it has now grown to $630 million. And the cash option is nearly $360 million. So, wish me luck. And two charts today, beginning here with the 6-month daily on the volatility index. And as you can see in the upper left, the symbol is $VIX using stockcharts.com. And we're back here because we're watching the move of the VIX on down from this top here, moving on down here. I was expecting something in this 22 range, perhaps maybe even as low as 20. And it looks like it's continuing on down. Interestingly, that this continues down, but the stock market is not quite going up in proportion, but that's fine. Keep watching this because the flag sort of pennant formation of this chart here is indicating a coiling that gets tighter and tighter as we move down the line here. And we're going to hopefully bottom and base again somewhere in this 20 to 22 range. And then at that point, we'll take a look and see where we go. Most likely we head back up again, which would mean that the stock market would head down. But there's no guarantees. Just keep watching this. In the lower part, you can see the MACD is performing just fine. And then in the upper portion here, you can see the RSI. It seems to be replicating the pattern that we have seen in the last several months. So keep your eyes on that. All right, now let's go to our charts. And now switching things up a bit, we're looking at the 20-year monthly chart on the Fidelity Nasdaq Composite Index ETF, and the symbol is ONEQ, and this serves as a pretty good proxy for the Nasdaq. Now, some good news being that from this top here, we've moved on down and we hit that 50 EMA and we bounced up here. I still think there's some volatility. We'll talk about that here in a second, but we've come down quite a ways. The Nasdaq seems to be leading the other indices on the way down, so that's why I'm focusing on this right now. But as you can see, in the past, we hit that 50 EMA back there in early 2020, as well as in late 2018, early 2019, and then of course back here in 2015, 2016, we of course went below in 2009. So we may continue down. I think there's going to be some volatility. Let's move into the oscillators, take a look. Volume will show you nothing, at least on this chart. Here, the MAC, you can see the fast line at that point there, the slow line at that point there, heading down very rapidly. So there's a large separation between those two, and that means volatility in the future, if not now. Here into the histogram, you can see this first attempt at a bottoming and basing here. These two drawdowns are at similar levels, and you want to see that before we start moving back up. So perhaps some bright side to this last trading sessions. Here in the price rate of change, once again, a small glimmer of hope with that fishhook at the very bottom there, but we're pretty deep at near -10 on that. The slow line is right here, still near that zero line, but it's going to come down. Again, separation means volatility, and you can see how long some of these basing and bottoms do take. So it's going to take a while. Don't be in any hurry. Moving here to the RSI, we're at a relatively weak 38.53. It is moving up and off of that bottom, but right now, being so weak, we still just have to watch that. I think there's plenty of time. Into stochastics, showing pretty much the same thing, a little glimmer of hope there. Again, separation between the fast and slow line means there is more time that needs to pass before we bottom and base. Now, here into the Williams, another glimmer, some saw-toothing going on in that oversold territory with that slight bounce out of the oversold territory, but I'm not going to make out much of that simply because it's so early, and again, I think we have plenty of time. Back up to that price chart, one last look, and let's see if we can ride along this 50 EMA, perhaps even stay above that. No bets, no guarantees. I'm just hoping that we do that. I think the only guarantee that I can probably give is that we do have more time and expect volatility, but now is the time to start picking those stocks that you're interested in, and as usual, conduct your due diligence with the fundamentals. And for today, that's ChewDog Charts. Thank you.